Thousands of jobs are on the line at Anglo American Platinum. The miner has started a restructuring process that could affect around 3,700 employees. It also plans to review contracts with 620 service providers. The move comes as the firm has struggled to keep a lid on costs amid falling platinum group metals prices. CEO Craig Miller says the decision has not been taken lightly, but it's become clear that even though Amplats has taken actions to reposition the business to deal with the current challenges it's facing, those measures haven't gone far enough. And so further moves are needed to ensure the sustainability of the business. Amplats' right-sizing announcement comes alongside the release of the miner's annual results. During 2023, headline earnings plunged 71%. That's as production slipped, costs rose and PGM prices fell. A final dividend of R9.30 has been declared. This takes the total for the year to R21.30, which is equivalent to a 40% payout of headline earnings. Looking ahead, Amplats is optimistic about the long-term demand for PGMs given their role in creating a greener world. And so the firm says it will continue to take the necessary steps to navigate the current macro uncertainties so that the business has long-term viability. Challenging, that's how Telkom has described the trading environment during its half year. The firm faced weak global demand for ceramic tiles, and on home ground, high levels of unemployment and indebtedness weighed and put homeowners off renovations. This contributed to a 15% slump in interim headline earnings per share. Investors will feel the pinch of this. While a dividend of 27 cents has been declared, it's 16% lower than last year's payout. Telkom has reported flat third-quarter core profit. That's as cost reduction initiatives partially offset inflationary pressures, expenses due to power cuts and bad debt provisions. Overall, group revenue ticked up 2%, while mobile revenue rose 4.8%. Along this trading update, Telkom has also informed the market that substantial progress has been made with regards to the potential disposal of its masts and towers business. The preferred bidder is a consortium of equity investors, and Telkom says the parties have significantly progressed their negotiations. Northam has warned of a profit knock. The miner says solid production and cost controls were not enough to offset a decrease in commodity prices. And so headline earnings per share for the group's half year are expected to be as much as 97.5% lower. More detail will be released when the company opens its books on the 1st of March. Life Healthcare is expecting an earnings boost. The firm says that earnings per share during its first half will increase almost sixfold. That's thanks to a once-off gain from the disposal of its Alliance Medical Group. The transaction won't, however, affect headline earnings per share. A further trading update will be issued after the end of the current period. In international news, China's narrow-body C919, competing with Airbus and Boeing's passenger jets, made its first appearance outside China at the Singapore Air Show. That's as it signals an interest in gaining more of a foothold in the aviation market this year. Here's more detail in this package report.
China's challenger to Airbus and Boeing's passenger jets made its first trip outside Chinese territory as it staged a flyby at the Singapore Air Show. The narrow-body C919 is made by the Commercial Aircraft Corporation of China, or COMAC. It was one of two commercial planes flying at the air show's media preview, which also featured aerobatics by teams from the South Korean, Indian and Indonesian air forces. According to the Singapore Economic Development Board, it's the first time Chinese exhibitors have taken part in the biennial show. It's also the first major international industry event since last month's blowout of a door plug on a 737 MAX 9 pushed Boeing into yet another safety crisis. China has invested heavily to try and break the grip Airbus and Boeing have on the global market. With the two Western playmakers struggling to meet production demand and Boeing ensnared in a string of crises, the aviation industry is watching how COMAC positions itself as a viable alternative. China has signaled plans for a push to boost the C919 and its maker's footprint domestically and internationally this year. The first of now 4 C919s began flying with China Eastern Airlines last year. So far, it's only certified within China. But the country's aviation authority said last month it would try and get the C919 validated this year by the European Union's regulator after starting the process in 2018. According to Chinese media reports, a COMAC official said in January the company will invest tens of billions of yuan to expand C919 production capacity over the next 3 to 5 years.
While China's airline industry gets a boost, German airports are preparing for a strike as Lufthansa ground staff to prepare down tools this week. And for more on that, it's over to our reporter, Darling Luchela.
That's right, Zinati. Germany's Verdi union has called on Lufthansa's ground staff to strike from tomorrow morning. This is the latest escalation in a wave of industrial disputes which have hit the country's aviation industry already this year. And joining me now with more on-the-ground insight is Ekrem Ikechi from Deutsche Welle. Thanks for your time today. Now, Ekrem, you are in Berlin, the capital of Germany. From where you are, how do things look like? What's the situation on that front?
Thanks for having me. The German service union Verdi has called a strike of Lufthansa employees from 4 a.m. on Tuesday to 7 a.m. on Wednesday for 27 hours. Major international airports across Germany are set to be affected. Lufthansa said that around 900 out of 1,000 scheduled flights have been cancelled. Now that is expected to affect around 100,000 passengers nationwide. German airports were hit by a wave of strikes earlier this month when security staff walked out, demanding higher pay. Over 1,000 flights were cancelled across 11 major airports on February 1st, impacting over 200,000 passengers. One of Europe's major transit hubs, Frankfurt Airport, had been heavily impacted by the strike action, with all passenger boarding cancelled. Again, this time the airports that will be affected are Frankfurt, Munich, Hamburg, Berlin, Düsseldorf, Cologne and Stuttgart. Lufthansa Executive Board member Michael Niggemann said the strike was unfortunate as the German carrier had made a far-reaching offer during talks which Verdi had rejected, and it would inconvenience customers and staff alike.
Let's talk about these demands. What do the Lufthansa workers want?
Well, pinched by inflation over the last years and in the wake of the COVID pandemic, Lufthansa workers are demanding higher wages to cope with the cost of living. Their union, Verdi, is demanding a wage increase of 12.5% for 25,000 ground staff workers, or at least €500 a month more over a 12-month period, plus a one-off payment of €3,000 to offset inflation. On the other hand, Lufthansa last week increased this offer to a 10% pay rise, which was rejected by 96% of employees who don't feel their wages match inflation in Germany, which was at 5.9% last year and 6.9% in 2022, but has now fallen considerably around 3%.
And what could happen next?
Well, a round of talks last Monday on February 12th had produced no agreement. The next round of negotiations will take place on Wednesday, February 21st. The ground services arm is among several groups of Lufthansa workers in negotiations over collective bargaining agreements. Verdi union said the ground crews once again feel upset and called basic hourly rates that can be as low as €13 per hour anti-social compared to pay rises offered to pilots. The union said it wants a speedy result for employees and passengers.
Thanks for your time and those insights. That was Ekrem Ikechi from Deutsche Welle.